First of all, happy New Year. I believe half the time I don't even know what year it is, but I believe it's 2024 now. So new year, fresh start, and hopefully that fresh start can be on your taxes too. And first of all, my name's Luke. I'm a business advisor here with Collective. And Collective is an all in one back office solution for your small business. We specialize in S Corps. So, what we would do if you came on board is if you're not an S Corp already, we'd make an S Corp election for you, handle your payroll, bookkeeping, and tax filing at the end. But today, with it being the new year, it's also a new Tuesday. And we like to call this special day of the week Tax Tuesday. And what we do every week is we host an AMA. We host an Ask Me Anything surrounding taxes, surrounding running your business, best practices, and things of that nature. So, please, any sort of tax question you have, I'll do my best to answer it. So hit us up in the chat with the questions you have. And before I begin, let me get the legal stuff out of the way. This is just a educational event. Don't take anything I say as official tax or legal advice. I'm not an attorney. So before you act on any of this, speak to a tax professional, speak to a tax attorney. This is just general information. But let's go ahead and get started. And I believe that I already have a few questions that have came in. And the first one is, what's an S Corp? That is probably one of the most important questions I can answer today, is since Collective is an S Corp company, is what exactly is an S Corp? Well, an S Corp, a lot of people have kind of a wrong idea about it, or they have a little bit of a misrepresentation about what an S Corp actually is. The technical name for it is a Subchapter S tax election, meaning it's not a business entity by itself. It is not a corporation. It's not something that you file with your state of residence to form a business. That's not what an S Corp is. An S Corp is a tax election. So it's a way to ask the government to tax your business entity in a certain way. So you either have to be an LLC, a partnership, a corporation, a C corporation, before you can elect S Corp tax status. So that's the first thing that needs to be understood. But the entire reason why you'd want to become an S Corp, or why you'd want to elect S Corp tax status, is to save on the self-employment tax. That's the whole reason. The self-employment tax, it's a flat tax rate of 15.3%. It's what it is. Before you become an S Corp, a huge chunk of your money, or in some people's cases, all of their money, is subject to that self-employment tax. So let's say that your net income, let's say that you're a sole proprietorship. Let's even say that you went ahead and set up your LLC, went ahead and got your business entity set up. How you'd come up with your self-employment tax is you would take $100,000 and you'd multiply it by 15.3%. That full 100 grand is subject to the self-employment tax before you become an S Corp. But when you make an S Corp election, technically what happens is you become an employee of your own operation. You become an employee of your own business, of your own LLC, when you make that S Corp election. You're still the owner. It's still your company. You're still listed as the owner on the company formation documents and all of that good stuff. But for tax purposes, you were also an employee. And since you're an employee, your business will pay you a salary. You'll receive a wage just like you'd receive if you work for someone else, like as a W-2 employee. But the advantageous thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is whatever you choose to pay yourself in salary. So for example, let's say that, let's go back to the earlier example, and let's say that you're making $100,000 a year. But let's also assume that with an S Corp, you now are paying yourself a $40,000 salary. Let's just assume that that's a reasonable salary for you in this situation. Now with the S corp, only the first 40K is subject to the self-employment tax, the 15.3%. The other 60K, or just the rest of your money, like outside of your salary, that is considered distributions on your behalf. You can also, like, conceptually speaking, you can kind of think of them as dividends. Long story short, that chunk of money is no longer subject to the self-employment tax. And so, if assuming that you make that much money, how you'd come up with your self-employment tax is you'd take 60K and you'd multiply it by 15.3%, because that's what you'd otherwise be taxed if you weren't an S corp. And that number comes out to $9,180 that you're no longer paying the government. So it can be quite a good chunk of change in tax savings, if you're making a certain income level. And the good news is that the distributions that you have, like, everything outside of your salary, you can take distributions anytime you want. You have complete access to that money at any time. So it's not like that money has to sit in the business bank account or anything like that. You can pay it to yourself whenever you'd like to. These are just tax classifications. But a nuance to that is, like, something important to keep in mind is that, because a lot of people ask me, they'll be like, okay, well, if I'm only subject to the self-employment tax on my salary, then why can't I just pay myself, $2 in salary, or, even like $10,000 in salary? Why can't I pay myself a super low salary and just take all of my other money out in distributions? And I always have to respond, is it because that makes it much more likely that you'll get audited by the IRS. When you have an S corp, one of the most important things to keep in mind is that your salary, your W-2 salary, has to be reasonable. Has to be a reasonable salary. What does that mean? The IRS doesn't give a lot of guidance on it. It's a facts and circumstance test. And there's some methods to come up with a reasonable salary. You take into consideration how many hours a week do you work in your business? In what area of the country do you live? And, what are, similar professionals, what are they making in W-2 salaries? All of those, and other things too, but all of those sorts of, characteristics are ways to come up with a reasonable salary. Okay. Here's another good question. I want to get my LLC started for this year. Any tips you can give me for the first month of January? Absolutely. And the first tip is to get that LLC set up as soon as possible, to get the LLC set up within the month of January. Because and really the most important reason to do that is so you can be an S corp starting the month of January. If you don't have an LLC in place, you can't start your S corp election. But as long as you get the LLC set up registered in the month of January, and you make an S corp election, you can be considered an S corp from January 1st onward. Even if you get the LLC registered like on January 20th or January 21st, as long as it's in the month of January, your S corp election can start on January 1st. But the other thing that I would say, especially if you're looking for assistance with this, is set up a call with Collective. We'll go through your situation, and we'll, if it's a good fit for you, then we'll move to get your LLC set up as soon as possible. And it's typically better to have a professional do that for you. So please, feel free to send us a message on Instagram, go to our website, schedule a call, and we'll talk through your situation. Another good question. What are some of the most important things to do for taxes before the start of tax season this year? Well, I think one of the most urgent things is, if you're self-employed, you have quarterly estimated tax deposits. The fourth estimated tax deposit for 2023, the tax return that you're going to be filing here on April 15th of this year, that fourth estimated tax deposit is actually due on January 15th of this year. So that's kind of one of the most urgent things, is to get in that last estimated tax deposit before January 15th. And even if you haven't been making estimated tax deposits previously, it's usually a good idea to get as much taxes for 2023 paid by January 15th. That way it's a chance you can, avoid some of the penalty that they might put on you or things like that. So that's one thing. Another thing I would say is just generally get prepared for the 2024 tax year, meaning that if you don't have an accounting system in place, get that in place and start keeping up with your books, start tracking your expenses and income. So, by the end of the year, you won't be scrambling to file your 2024 tax return. So, that's what I would say. And also, it's a good idea to determine whether or not you should be an S Corp this year for 2024. It's a good idea. If you think that you'll make enough money this year to where an S Corp election will be worth it, then it's a good idea to get that S Corp election in as soon as possible and start considering yourself as an S Corp as soon as possible this year. So those are the things I would say. Does 2024 have any advantages than 2023 in terms of becoming self-employed? Is this year better? No, I wouldn't say that. I wouldn't say that. I wouldn't say that any year is better to become a self-employed person than any other year. I wouldn't put it that way, but I would just say in general that to become self-employed is very rewarding. And the reason I know that is because as a business advisor for Collective, I speak to self-employed people all the time. And although, when you become self-employed, you usually have a little bit more work, more responsibilities, but that typically makes your professional life also a little bit more meaningful when you're running the show. And also, too, you can make more money. People that own their own businesses generally make more money than people who are employees. So I guess I wouldn't say like there's advantages in terms of the tax years, but there's definitely personal advantages to becoming self-employed. So if you're thinking about becoming self-employed, do it. I have an office for my contractors. Can I write off things like PS5s and TVs for them to use on their breaks? So this is a little tricky. I mean, because with a lot of answers to tax questions, a lot of times the answer is it depends, you know. And for the TVs, like let's say that you've bought the TVs explicitly for the reason of using them for your contractors, so your contractors can enjoy them and whatnot, then yes, that might be a tax write-off. It might be. Now, PS5, that's a little bit more complicated because a PS5, if you yourself are playing that PS5 at all, that's a personal purchase, and the IRS would kind of would look at that, and they would, even if it is an allowable expense, that PS5, the IRS would still look at that more closely. If you were ever, if you ever went through an audit or anything like that, they would be very skeptical on that. So this is what I would say. Is technically speaking, yes, it is theoretically possible that either of these could be business write-offs. But even though that you can theoretically write certain things off, you don't necessarily always want to do it, even if you're technically allowed in the tax code, because there's certain steps that you do that you can take that puts the IRS's eyes on you. And they have eyes that you don't want to see. They're scary and red, and they look like monsters' eyes. So I would be careful about that. Just be cautious about writing things off that are kind of on the line. The IRS is not your best friend at the end of the day. I'm scared about making the jump towards self-employment. Is there anything you can tell me to help ease that worry? Well, if you weren't scared, then I'd be surprised. Any new venture, any new sort of path in life is scary, especially self-employment, especially when you're on the hook for your own finances, when you're on the hook for all the compliance issues and everything like that. And what I'm getting ready to say is going to sound like something a salesperson would say, of course, but it's true. When you go on a new journey like self-employment, especially given how complicated the US tax code is, it's important to have a knowledgeable tax professional in your corner who can guide you, who can do some things for you, and so you can focus on your own self-employment. So honestly, the big thing that I would say, the most important thing is to outsource all the compliance, the tax issues, the accounting, all that kind of stuff. It's a good idea to outsource that, especially the first year in self-employment. self-employment, or the kind of the near the beginning of your self-employment journey, because I don't care how smart you are, which if you're jumping in the self-employment fields, it's very likely that you're very intelligent. I'm not saying that, but there is not enough intelligence in the world to just automatically understand the U.S. tax code. The U.S. tax code is not intuitive. It's not something that you can just kind of look at and figure out on your own if you don't have experience in it, or else it's very hard to. The IRS language is vague. A lot of things that you're going to read online and things that you research are not going to make sense at all. So to ease your worry, get a professional that will help you with the compliance issues. That's the biggest thing. Everything else you can figure out. How to make your money, you can figure out. How to, gain the experience in your industry, you can figure that out. That's not a problem. But the tax code is very hard to figure out. How can I increase my tax knowledge? Well, I'm going to be frank with you. There's certain basic things that you can become, knowledgeable in just by running a business and, going through it, getting that experience. But to be quite frank, it's hard to increase your tax knowledge to, solidly if you don't work in taxes day in and day out, if it's not your career. Because here's the thing about self-employment. When you start a business, you're starting a business typically because you got some experience in it. And if you don't have experience in it, typically you can figure it out. You can research, you can, for example, if you're a coder, let's say that you're starting a software engineering business, you can go online. There's plenty of free resources to learn how to code, do all this kind of stuff, to build your knowledge. But the tax code is different. I don't want to, sort of badmouth the IRS because they're a needed service. We have to have an organization that collects our nation's taxes, but they deliberately, in my opinion, make the tax code complicated because they have more money. It gives them more. The more complicated the tax code is, the more chances they'll have to charge you more taxes, to make themselves more needed. So I would be very, what I'm trying to say is it's hard to increase your tax knowledge, in the more complicated arenas if you don't work in it. I'm just going to be frank with you about that. Do you think anything for the tax code will change this year? Well, something already has changed from the tax code. So there's this new report that the federal government has sort of constructed to where if you have an LLC, you're now required to share information with them about who owns that LLC. You have to file a report. And I believe what it's called is it's a FinCEN report, FINCEN. And if you don't, there's deadlines and things on that. So that's something that's changing with the tax code. Now, something else is I believe that the standard deduction will change this year for 2024. I believe it will go up. So essentially, the standard deduction is just the amount that you can write off just automatically on your personal tax return. So keep that in mind too. Can I lose my LLC status if my business does not make enough revenue? No. That's totally fine. The LLC, whether or not you have an LLC, that typically doesn't have anything to do with how much money you're actually making. You can have a loss and still have an LLC. And when I say a loss, I mean you could have more business expenses for several years than you do in revenue, meaning your net income is negative. It's a loss, but that's okay. All an LLC does is it provides sort of liability protection and separation between personal and business assets when you have a business operation. That's the main point of an LLC. But it's very common for LLC owners to not make any money for a few years. But that shouldn't affect the status of your LLC. The only thing that should affect the status of your LLC is if you don't. Most states have an annual report that you need to file with your LLC. You could do it online. It's usually pretty easy. Now, that could affect the status of your LLC if you don't keep up with those annual reports, or if you don't pay um, if you don't pay like annual fees that certain states charge for LLCs. So, for example, in California, they have an $800 entity tax that they charge on LLCs, and if you don't pay that, that can affect the status of your LLC. All right, we've got several more great questions. Okay, what is the difference between collective and collective-like competitors? Well, we're better. No, I'm just kidding. What I would say, from what I hear, because that's my job, as a business advisor for a collective, it's my job to go through, certain client situations and to see if collective would even be a good fit for them. And from what I've spoke to people that come from our competitors is the responsiveness. The responsiveness they get from their account manager or, someone like that is not very good. That's one thing. Another thing, it seems to be a little bit more a lesser touch service. Like these other companies just do the basics and kind of just, charge a minimum amount that will only sort of satisfy the sort of bare bones of your business. Collective, we do as many things as we can for you, especially with the S Corp election. That's another thing, is from our competitors, there are a lot of people that I've spoken to that have come from our competitors that aren't S Corps when they need to be. That's something else that's really important, is these other companies aren't advising when they need to become S Corps. So they're causing them to put a lot of self-employment tax on the table. And also, too, I would say that we're more convenient than our competitors. You can think of collective kind of as an all-in-one solution for an S Corp or for a business that needs to be an S Corp. You don't have to be an S Corp yet. We would make an S Corp election on your behalf. But that's a big one, is convenience. Usually with other companies, especially with CPAs or just other companies like us, they don't handle everything. Or there's huge things they have to outsource and things like that. Collective, we do as much as we can. Does collective ever have any public events or in-person events? Absolutely. So one, I would encourage you to just check out our social media pages. We have a great team that shares tax information, shares free resources on our social media pages. So that's one. And two, we run tons of webinars. Like we typically have multiple webinars every month that goes through how S Corps work, how the basics of the self-employed taxes, things like that. And absolutely, here and there, we even put on in-person events, whether it'll be, member events, members of collective that can mingle together, or just other events that you can come and learn more about collective. Can I pay for my insurance premiums from my HSA? Yes, you can pay for certain insurance premiums, like from your SHA. And generally, funds can be used like tax-free for qualified medical expenses as defined by the IRS. So, typically, here are some of the kind of the insurance premiums that you can pay for your SHA. Long-term care insurance, that's one. Healthcare continuation coverage, like that includes insurance like COBRA, things like that. Medicare and other healthcare coverage, if you're over 65. But those things can be really complicated. So before you do any of that, be sure to consult with a tax professional before you do any of that. Okay. It's for this year, the individual standard deduction is $14,600. Thank you for whoever put that information up there. But that actually, the standard deduction is going up from last year. So that's something to keep in mind, is this year you'll be able to write off a little bit more in the standard deduction. Is there any situations where an S Corp wouldn't be advantageous? That's an excellent question, because of course, with me working for Collective, I talk a lot about the pluses of S Corps and why you should be an S Corp. But there are several situations to to where you should not be an S corp. And the big one is the type of income that you have. If your income is coming from passive sources like rental income, stocks and bonds, certain sorts of leasing, things like that. Passive income does not need to be under an S corp. The reason that is, the entire reason why you'd want to make an S corp election is to save on the self-employment tax. That's the whole reason. The self-employment tax is only charged on active income, like your own business, things that require your active participation to make your money. That's active income. Self-employment tax is charged on that. So of course, in certain situations, you want to make an S corp on your active income to save on the self-employment tax. But if you put passive activities under an S corp, all you've done is you've made your tax situation more complicated, and it's not saving you any money. It's not saving you in the self-employment tax because you don't pay self-employment tax on passive income. So that's one thing. Another thing is you would at least need to talk to someone about whether or not you should become an S corp if you have a high-paying W-2 job that's separate from your business or separate from your side business. If you work for someone else and have a really high-paying W-2 job, that makes it less worth it to become an S corp. And the reason that is because the self-employment tax, like the entire reason, the tax rate that you're trying to save on with the S corp, the self-employment tax, literally another word for that is Social Security and Medicare tax. That's literally what the self-employment tax is. And so like when you work for someone else, like as a W-2 employee, you still pay the self-employment tax in effect because you pay the Social Security and Medicare tax. It's even the same tax rate. It's 15.3% that's charged in your salary. The only difference is that your employer, whoever employs you, whoever pays your paycheck, they have to pay half of that self-employment tax, of the Social Security Medicare tax. You pay 7.5% and they pay 7.5%. But when you're self-employed, you're on the hook for the entire thing. However, though, the Social Security portion is by far the largest portion of the 15.3%. It's somewhere around 13%, maybe 12 point something odd percent. It's somewhere around there. So it's most of the tax rate. The Social Security portion actually caps out at $160,000. So if you make at least $160,000 in a W-2 job that you have, you will no longer pay that portion of the self-employment tax. It caps out. It caps out at $160,000. So once you make that much money on your W-2 job, any money that you make from your business will only be charged the Medicare tax because you've maxed out the Social Security portion. So your self-employment tax for your business goes down from 15.3% all the way down to like 3% or even a little bit less. So it makes it a lot less worth it to do the S corp because you're saving a lot less in the self-employment tax by doing so. So typically, people it depends on your personal situation. It depends on your business situation. If you're making a lot of money in your business, like $1 million, you're still saving the 3% on your distributions. So that could be, $15,000 in certain situations, $20,000 in certain situations. So it could still be worth it to have an S corp when you have a W-2 job, but it just makes it less worth it because you're saving less in tax. Okay, I think I have time for one more question. Do you still pay quarterly estimated tax deposits with an S corp? Yes, you do. So let me put it to you this way. With your S corp, you're going to be on a paycheck. So that W-2 paycheck will have the tax deductions already coming out of it, automatically. So, that will cover, some of your self-employment tax. But anything that those deductions from your paycheck don't cover, you'll still need to pay on your quarterly estimated tax deposits. But unfortunately, that's all the time that I have left today. I actually have a conversation with a prospective collective member that I need to get to. But I would leave you and just quickly say that, if this has interested you, if you think that you might need to be an S corp, schedule a call with us as soon as possible. You'll go, you'll go, you'll speak to a business advisor like myself, and we'll go through your situation. We'll see if you need to be an S corp, and then from there we can figure out what we need to do. But I had a lot of fun, as I do every week, and I will see everyone next week.